Did you know that over 75% of renters in America believe they'll never be able to buy a home? And they might be right. Home ownership, once seen as the foundation of the American dream, is now slipping away from millions. But why? Is it just bad luck, poor money habits, or is something much bigger and more broken happening behind the scenes? In this video, we're exposing the 10 real reasons why so many Americans are locked out of the housing market, and some of them will shock you. From Wall Street buying entire neighborhoods to hidden policies no one talks about, what you'll discover might just change how you see the system forever. Stay with us. The truth is coming. Number 1. Skyrocketing home prices. Let's start with the most obvious and possibly the most devastating reason. Home prices in America have skyrocketed beyond belief. In just the last decade, the median home price has more than doubled. According to data from the Federal Reserve, homes that sold for $200,000 in 2013 are now going for $400,000 or more. But here's the catch. Wages haven't kept up, not even close. While home prices soared, income growth crawled. So even though people are working just as hard, if not harder, they're getting priced out of the market before they even begin. Think about it. Let's say you wanted to buy a modest starter home in your area. Not a mansion, not a luxury condo, just a small house with a roof, a front door, and a yard. Now look up the price of that home today. You'll probably be shocked. And if you're trying to save for a 20% down payment, you're looking at $60,000 to $100,000 up front, not counting closing costs, inspections, or moving expenses. That's not just unrealistic for most people, it's impossible. But here's what's even more alarming. Even tiny homes, fixer-uppers, and homes in rural areas are rising in price. In some cities, bidding wars are breaking out over houses that aren't even in good condition. This isn't just inflation, this is systemic exclusion. The dream of owning a home is being turned into a luxury item, a status symbol for the wealthy, instead of a basic goal for working Americans. So if you feel like you're falling behind or that homeownership is drifting further away every year, you're not imagining it. The system is designed to make you feel that way. Number 2. Stagnant wages versus exploding costs. Here's something nobody likes to talk about, but everyone feels you're working harder than ever, but earning less. While housing prices have skyrocketed, wages have barely moved. According to the Economic Policy Institute, real wages, meaning income adjusted for inflation, have remained mostly flat for the average American worker since the 1970s. So yes, you might be earning more dollars on paper, but those dollars buy you far less today than they did even 10 years ago. Let's break that down. A gallon of milk, more expensive. Gas, through the roof. Health insurance, childcare, groceries, utilities, everything costs more. But your paycheck? It's stuck in the past. This creates a brutal reality. Even people with decent jobs are living paycheck to paycheck with nothing left over to save, especially for something as massive as a home. Here's the kicker. To qualify for a mortgage, lenders look at your debt-to-income ratio, and when your income is barely covering the essentials, you look like a risk, even if you're financially responsible. That dream of owning a home, it slowly becomes a distant fantasy. And this isn't just affecting individuals, it's reshaping entire generations. Millennials and Gen Z are delaying marriage, starting families, or moving to cheaper cities just to survive. This wage crisis isn't your fault. It's not because people aren't working hard enough, it's because the system is no longer rewarding that hard work. So when people ask, why don't young people buy homes anymore? Maybe the better question is, how are they supposed to when the economy has left them behind? The truth is harsh, but it's time to face it. Number 3. Crushing student loan debt. For millions of Americans, homeownership isn't the first big financial step, it's the second. The first? Student loans, and for many, those loans have become a life sentence. Right now, the average student loan borrower owes over $37,000, and that number jumps even higher for those with advanced degrees. Monthly payments of $300, $500, or even $1,000 are not uncommon. So what does that mean for someone dreaming of buying a home? It means a huge chunk of their monthly income is already tied up. It means lower credit scores, higher debt-to-income ratios, and fewer chances of getting mortgage approval. In fact, a study by the Federal Reserve found a direct correlation between student loan debt and declining homeownership rates among young adults. Put simply, the more you owe, the less likely you are to buy. But here's the real tragedy. These people did exactly what society told them to do. They went to college. They invested in their future. They believed education would lead to opportunity. Instead, they were handed a diploma and a mountain of debt. And as interest piles on, many feel like they're drowning. Saving for a down payment becomes a fantasy, not a plan. Every financial move becomes a trade-off. Should I pay off my loans or try to save for a house? It's a no-win situation that punishes ambition and paralyzes progress. So when we talk about why homeownership is out of reach, we can't ignore the silent weight of student loan debt and how it's holding an entire generation hostage. Because we put a lot of effort into making these videos, please subscribe to our channel. It's just one click, but it means the world to us. Number 4. Tight lending standards. Even if you've saved up, worked hard, and done everything right, you still might not get approved for a mortgage. Why? Because in today's housing market, it's no longer just about whether you can afford a home. It's about whether the bank thinks you're worthy. After the 2008 financial crisis, lenders tightened the rules. And while that might have helped prevent another meltdown, it also shut millions of people out of home ownership. To get approved for a conventional mortgage today, you'll likely need a credit score of 700 or higher, a debt-to-income ratio below 43%, at least 10% to 20% down, and a spotless financial history. No missed payments, no red flags. Sounds reasonable, right? Now ask yourself, how many Americans actually meet all those criteria? Spoiler, not many. Even government-backed loans like FHA or VA loans, which are meant to help first-time buyers, come with hidden fees, stricter conditions, and longer approval times. And if you're self-employed, that opens an entirely different can of worms. Many gig workers, freelancers, and small business owners who earn a solid living get denied simply because their income isn't traditional. In short, the system favors those with predictable, picture-perfect financial lives. But for millions of hardworking people with imperfect credit or non-traditional income, the dream ends at the bank's front door. So if you've ever felt frustrated, confused, or flat-out rejected by the mortgage process, you're not alone. The rules are no longer written for regular people. They're written to protect institutions, not to help you buy a home. Number 5. Lack of financial education. Let's be honest, most Americans were never taught how money really works. Not in school, not at home, not even in college. Ask the average high school graduate how a mortgage works, what a credit score means, or how compound interest builds, and you'll likely get a blank stare, and it's not their fault. In fact, only 17 states in the U.S. require personal finance education as part of their curriculum. That means the majority of young adults are stepping into the real world without the most basic tools to manage money, let alone buy a house. They're learning the hard way through overdraft fees, maxed out credit cards, and rejected loan applications. When it comes to homeownership, this lack of knowledge becomes a major roadblock. Many people don't even know where to start. How much do I need for a down payment? What's a fixed-rate mortgage? What's PMI and why am I paying it? Without clear answers, most people just shut down. They either keep renting or wait too long to take action, missing out on opportunities they didn't even know existed. And let's not forget how predatory lenders and real estate gurus take advantage of this knowledge gap, pushing people into bad deals that set them back even further. The result? A generation that's financially overwhelmed, confused, and disconnected from the idea of ever owning a home. But here's the twist. Financial education doesn't have to be complicated. It just has to be accessible. And unfortunately, in America, it's often intentionally kept out of reach. Number 6. Investors are buying up homes. Here's a reason that doesn't get talked about enough, and it might be one of the most infuriating. You're not just competing with other families for homes anymore. You're competing with Wall Street. In recent years, massive investment firms like BlackRock and Invitation Homes have started buying up entire neighborhoods, not just a house here and there, entire blocks. Why? Because homes are no longer seen as shelter, they're seen as profit machines. These firms don't buy to live in them, they buy to rent them out, raise the rent every year, and hold on to the property while it appreciates. According to Redfin, investors bought roughly 1 in every 5 homes sold in the U.S. in recent years, and in some cities, it's even higher. Now picture this. You've saved up, found a home you love, and are ready to make an offer. But before you even get a chance, a cash offer comes in from a corporate buyer with no contingencies and above asking price. Who do you think the seller is going to pick? These investors inflate housing prices, reduce supply, and make it nearly impossible for regular people to compete. They're turning the American dream into a corporate portfolio. And the result? More people are forced to rent, often from the very companies that price them out. It's not a conspiracy theory. It's happening every day, and it's completely legal. So if you've ever felt like you're playing a game that's rigged, you're not crazy. You're just not playing with billions of dollars behind you. Number 7, the disappearing middle class. There was a time, not that long ago, when a single income could buy a house, support a family, and even leave something behind for the next generation. That era is over. Today, the American middle class is shrinking, and fast. According to Pew Research, over the last 50 years, the number of Americans considered middle income has steadily declined. Wages are stagnant, the cost of living keeps climbing, and more people are falling into either the lower or upper extremes. And what's the result? The financial foundation that once made home ownership realistic for the average family is now crumbling. Things that used to be considered normal, owning a home, driving a decent car, taking a vacation, are becoming luxuries. Even with 2 working adults in a household, many families still struggle to save, let alone invest in a home. Let's not forget, the middle class didn't just represent income, it represented stability, dignity, and opportunity. And most importantly, it represented hope, the belief that if you worked hard and followed the rules, you could achieve something better. But now, many Americans are working multiple jobs, side hustles, and still can't afford basic needs, let alone home ownership. This shift is not an accident. It's the product of decades of economic policies that favor the wealthy, weaken labor power, and widen the gap between the top and the rest. When the middle class disappears, home ownership disappears with it, and when that happens, the American dream stops being a dream and becomes a myth. Number 8, lack of affordable housing supply. It's simple economics. When demand is high and supply is low, prices go up. That's exactly what's happening in the U.S. housing market right now. There just aren't enough homes. According to Freddie Mac, the U.S. is short by over 3.8 million housing units. That's not just a number, it's millions of families who want to buy but have nowhere to go. And here's the kicker. Developers aren't building enough starter homes. Instead, they're focused on high-end properties and luxury developments where the profits are higher. Why build a $200,000 home for a working-class family when you can sell a $1 million property to a wealthy investor? It's not personal, it's just business. Even in areas with land and space, zoning laws and outdated regulations slow down or block new construction. In many cities, you can't even build multifamily units or affordable housing due to local resistance or NIMBY attitudes. Not in my backyard. The result? First-time buyers face fierce competition for a small pool of homes. Bidding wars are common, even for rundown properties, and those who lose out are often forced to keep renting, paying high monthly rates without building any equity. It's a vicious cycle. Less supply means higher prices. Higher prices push people out. And the people who are pushed out, they're often the ones who need a home the most. This isn't just a housing shortage, it's a housing crisis. And unless more affordable homes are built, that for sale sign might stay forever out of reach. Number 9, gentrification and displacement. What happens when your own neighborhood becomes too expensive for you to live in? That's the reality for millions of Americans facing gentrification, a slow but powerful force that's pushing longtime residents out of the very communities they helped build. Here's how it works. Developers move in, trendy coffee shops open, rents rise, and before you know it, property taxes go through the roof, and people who've lived there for decades are suddenly priced out. They're not moving because they want to. They're moving because they can't afford to stay. What's worse? This often happens in working class and minority neighborhoods, where residents have already faced years, if not generations, of economic disadvantage. Gentrification doesn't just raise prices, it reshapes communities. Schools change, local businesses disappear, new wealthier residents take over, and those who are displaced, they're pushed further to the outskirts, farther from jobs, schools, healthcare, and opportunity. This creates what experts call economic exile. People are forced to travel longer distances for work or settle in areas with fewer resources just to find something affordable. Meanwhile, the homes they left behind, they're sold or rented at premium prices to people who can afford them. It's a hidden form of housing inequality that isn't talked about enough, because on the surface, gentrification looks like revitalization, but for many, it feels more like erasure. So when people ask, why don't you just buy a home in your community? The sad answer is, it's not my community anymore. Number 10, renting is becoming the new normal. Here's a truth that should scare all of us. Millions of Americans are giving up on the idea of ever owning a home. Not because they don't want to, not because they're lazy or irresponsible, but because the system has made it feel pointless to even try. With rising prices, stagnant wages, overwhelming debt, and impossible lending standards, more and more people are choosing to rent, long-term or even permanently. In fact, a growing number of adults, especially millennials and Gen Z, now say they don't expect to ever own a home in their lifetime. Some are turning to alternatives: tiny homes, shared living spaces, van life or RV living, or just permanent renting. And while these lifestyles are sometimes framed as freedom, let's be honest, most people didn't choose this. They were pushed into it. Renting can mean flexibility, yes, but it also means no equity, no long-term security, and no stake in your community. You're subject to rent hikes, lease renewals, and the whims of landlords who may sell the property at any time. Meanwhile, homeownership, historically the biggest wealth-building tool for the middle class, is becoming something only the wealthy can afford. So the American dream is quietly being redefined, from own a home and build a future to just survive however you can. That's not progress, that's a warning, because when a nation stops building homeowners, it stops building generational wealth, stability, and hope. The truth is hard to hear, but even harder to ignore. Homeownership, once the cornerstone of the American dream, is slipping further and further out of reach for millions. It's not just about money, it's about inequality, broken systems, and shifting priorities. We've uncovered 10 powerful reasons why so many Americans will never own a home, each backed by research, trends, and real-life stories. And together, they paint a picture of a nation where opportunity is no longer equally available. But this isn't just a crisis, it's a wake-up call. Because when owning a home becomes impossible for the average person, we're not just losing real estate, we're losing hope, stability, and the foundation of a future. If you're feeling discouraged, you're not alone. But there are ways forward, and that's where we go next. The problems are real, but solutions do exist. And while not all of them are easy, they offer a path toward change. Local governments need to incentivize builders to construct starter homes and multifamily units, not just luxury condos. That means revising outdated zoning laws and cutting red tape for affordable developments. We need to teach real-life money skills, starting in high school. Understanding credit, loans, interest, and mortgages empowers people to make smarter financial decisions earlier in life. Reducing interest rates, expanding forgiveness programs, or offering housing incentives for borrowers could make homeownership more attainable for those burdened with debt. There are programs out there, grants, subsidies, and low down payment options. The problem? Many people don't know they exist. Governments and nonprofits need to invest in awareness and accessibility. It's time for serious conversations about limiting how many homes large investment firms can buy in residential neighborhoods. Housing should be for people, not just portfolios. Fair wages, better health care, and stronger labor protections all contribute to financial stability, the foundation of homeownership. Real change starts when we stop accepting this is just how it is. If millions are locked out, it's not a personal failure. It's a broken system. But together, we can pressure the system to change. What do you think is the biggest reason people can't buy homes today? Drop your thoughts in the comments. We read every one. Let's talk about it. And if you haven't seen our previous video, make sure to check it out. It connects deeply with this topic. We put a lot of effort into making these videos for you, so please support us by subscribing. It's just one click, but it means the world to us.